Grains closing mixed on Tuesday. John Heinberg is back with analysis. And John, corn ending a little bit lower, kind of disappointing after some early strength on Tuesday. But how much of it was due to talk that we may not see any 45V guidance?
I do think that was a bit of a trigger in terms of how the market traded on Tuesday. It was just when those headlines came out in terms of that 45Z tax policy that the market's been really waiting for quite a while. So the talk that we were not going to get that by the end of the Biden administration, I think was pretty disappointing. Obviously, the Trump stance in terms of some of the biofuels, obviously a little more on the negative side. So maybe there's just concerns in the marketplace that this potential demand source of the sustainable aviation fluid might be just sliding to the sidelines here. I think that weighed on the market in terms of how it traded into the rest of the day yesterday.
Plus, we also ran up into some chart resistance too, didn't we?
Yeah, we got a lot of moving averages that we're trying to fight through here. We put a nice little bounce in right prior to first notice day at the end of that basis contract pricing window. Now we're up about a nickel off of that point, but then now we've got multiple moving averages sitting on top of us here. And now if we can get through yesterday's high in terms of the trade on Wednesday, maybe we get a little bit of technical buying that can push us back up, challenge that 440 area on the March contract. But then we got to be careful. We start getting a little expensive compared to the rest of the globe up there, and that could slow that demand pace down.
And then soybeans did manage to close higher. Was that all short covering, or were we following bean oil?
I think it's a combination of factors going there. First off, that bean oil market has been a driver behind the soybean price rally since we put our lows in here at the end of the summer. So again, bean oil right now, a little bit oversold on the chart. U.S. bean oil is very competitive compared to the global market. Some talk that we saw some export deals maybe building there. I think helped that bean oil market out, supporting those soybean prices on Tuesday. But at the same time, too, that January contract just holding that key line of support underneath this market. Deferred contracts have kind of broken through that area, but January at least still holds strong. I think that's just tied to the fact that U.S. beans are still a little bit more competitive on the demand front, at least through the month of January.
Thanks so much, John Heinberg with Total Farm Marketing. We'll have more AgDay coming up.